Hi everyone, hope you had a wonderful week. This is Victoria from crushcrypto.com and welcome to this week's market update on the crypto space. There wasn't much going on in terms of news, but the market continued to trend downwards in the past week. The overall cryptocurrency market cap dropped by 8% to $281 billion. As the market continued to correct, Bitcoin dominance increased back to 40%, the first time in 2 months. Bitcoin prices fell 4% over the week to around $6,500 as average trading volume slumped 10%. Meanwhile, Ether prices dropped 5% to the $500 level. Other major coins had weekly declines ranging from 3% to 15%. Most of the major tokens continued to correct during the week. Tron, VeChain, Ontology, Zilliqa, and Eternity suffered double-digit declines ranging from 10% to 18%. Binance Coin continued to outperform with a weekly gain of 17% after rising 9% the previous week. During the week, Binance announced it was supporting the Icon and Tron mainnet token swaps and added the respective trading pairs to their platform. The exchange also continues to offer promotions and airdrops for various tokens, including its own. On to this week's developments in the crypto space. In the US, the SEC's Director of Corporate Finance indicated that Ether was not a security. According to his statement, both the Ethereum network and Ether are not considered securities transactions by the regulatory agency. Similarly, the SEC does not consider Bitcoin as a security either. In their view, Ether and Bitcoin are more similar to commodities like gold, silver, and oil. On the other hand, there are tokens and ICOs that may be considered securities, and their classification highly depends on how the tokens are offered or sold. This latest statement from the SEC is considered positive as it provides more regulatory clarity that paves the way for more institutional involvement in the future. The Financial Action Task Force, which is an international financial authority, will be working with Japan to introduce unified regulations for the cryptocurrency market. The task force, which oversees 37 countries around the world, will work on coming up with international regulations for exchanges operating in leading markets such as Japan, South Korea, the US, and Europe. Regulators are expecting the task force to first focus on national licensing programs for crypto exchanges and then moving on to discussions related to anonymous cryptocurrencies. Japan already has a licensing program for cryptocurrency exchanges operating within its country, while South Korea had earlier announced plans to regulate crypto trading platforms in a similar fashion as banks. A subsidiary of one of China's largest e-commerce companies, JD.com, announced that it will be issuing asset-backed securities on a blockchain. The subsidiary, called JD Finance, plans to issue these securities using a consortium blockchain where each party will record transactions transparently. The initial trials will assess whether this blockchain solution will be able to meet the demands of issuers, underwriters, and buyers throughout the asset securitization process. JD Finance continues to be at the forefront of exploring and incorporating blockchain technology in its business. Last year, JD Finance issued an automobile loan using a blockchain platform. Meanwhile, JD.com announced earlier this year that it will be launching a proprietary blockchain-as-a-service platform later in the year. And here are a few other notable news from this week. To access the URLs, please download the PDF version of this presentation. The link is available in the video description. Thank you very much for taking the time to watch our video. Please check out our weekly report at crushcrypto.com for more information and links to other articles and news from this week. Hope you're having a great day, and we hope to see you again next week.